technology. It's actually utilizing your people, upskilling your people to be able to use technology more efficiently and to deploy it more efficiently in your company. And then you can maybe minimize how much compute you need or that cost, but maximize the impact on business.
You're not token maxing. You're not calling your CEO to be like, hey, how many tokens can we use at once?
Not yet. Not yet. Maybe I'll see something different here.
Thank you so much for joining. Such a pleasure to see you here in Berlin. Bonnie, that's Anuj Ranjan of Brookfield.
Danny, thank you so much. Bloomberg's Danny Berger will be bringing you interviews throughout the day from Super Return in Berlin. Now a look at what's ahead for your trading day. First up, the main event today is ACPI. That's out at 8:30 a.m. New York time, obviously. Then we get the federal budget balance. That's at 2 p.m. Eastern. And earnings coming from Chewy, before the bell, and Oracle. Here's some pre-market movers. Supermicro tumbling once again down more than 8%. They said they're planning to raise $7 billion in an equity deal for AI equipment. TSMC, well, coming with sales rising about 30% in May. Investors not loving that. It's not on track to beat previous quarters. We'll see what it does next month. Oracle down more than 3%. It's for head earnings due after market close, and we're anticipating quite a large move after earnings and according to options markets. Let's take a look at your macro environment as we go into the Wednesday session with a lot of question marks. So we have Nasdaq 100 futures pointing to a second down day for the Nasdaq. Remember, yesterday we were going to be looking at a second up day, and it all turned around. Tech selling off and continuing to sell off in the free market. The 2-year yield is at 4.13. It is back off that basis point that it lost yesterday. And we have the VIX trading just below 21. It was above that just 2 months ago. This unsettling environment that we're in, where the US and Iran were trading higher overnight. That does not stop for now, but there is that tech sell-off contending as well. And I think this is what we're looking at in terms of Brent crude. Even with all of those overbacks, Brent hasn't really advanced. We're at 91.26, and WTI is still below $88 a barrel. Gold as well, continuing its sell-off. It's staring firmly in the face now of $4,000. All right, that's it. Do stay with us. We will be counting you down through that CPI data, the all-important data coming at 8:30 a.m. Eastern. It will be key in terms of the Fed decision coming next week. We also want to reiterate that we got news that the Bank of Japan Governor Ueda is hospitalized for 2 weeks and will be missing that Bank of Japan meeting next week, where widely the bank is anticipated to hike rates. That's it for Bloomberg News.
남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이제 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금 나는 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가도 나는 조금씩 변해가 그날은 날 지나 지금의 나를 만나 이제 나랑 뒤돌아보는 대신 앞으로 걸어가야 이게 나야 지금의 나더 이상 숨지 않아 무너진 기억 위에서도 나는 다시 날 세워 이게 나야 흔들림 없이 끝이 아닌 순간 견뎌낸 모든 이유가 나를 더 단단하게 만들어 your television or wherever you get your
Good morning. This is Bloomberg Savannah.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deal. Welcome to Bloomberg This Week. This is Bloomberg Television.
During this week on Wall Street Week, we're exploring the topics in business, markets, economic, fashion, and climate. More than a few to know, something you need to think about.
The markets are wagging the economy, not the other way around.
The majority of the opportunity here is really in the AI compute space.
As long as the capital markets remain open to these really massive market caps, that's the opportunity.
This is really, I think, an earnings-driven story.
It could be more choppy this summer, but we don't think that the bull market in equities is over.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, tech stocks decline, extending losses following wild swings for high-flying chip stocks as a record-breaking SpaceX IPO is reportedly 4 times oversubscribed. Investors are bracing for a hawkish Fed heading into the next read on inflation. CPI expected to hit fresh multi-year highs.
There's so much money sloshing around in capital markets. You see companies that are spending and spending and they have the money to spend. They're raising money and people want to give them money to spend. How much of it is really excited is the consumer prices that everyone is feeling, and that's what we're going to see today. Today at 30 a.m. The potential for a north of 4% CPI year over year was put it at the highest level going back to 2023 as we see components and energy costs for everything rise.
So we haven't had a poor handle for 3 years. Just think about that. Where was Fed funds 3 years ago? 5 handle. Right now, 375. How much work does this Fed have to do later this year?
2023 at that point, they crossed through our cycle, and they expected this to cause pain. Remember the pain speech? Well, now we're in a situation where people are still pricing in potentially, not pricing in, we're pricing in one rate hike by the end of this year. But the talk on Wall Street is still the potential for a rate cut, even as you see a reacceleration of inflation. And I will tell you, down on the beaches of Rio, when I was talking to the CEOs, all I can say is, I was talking about how demand is absolutely surging regardless of higher prices. Okay, well, we're here on the beaches of Rio, but I was in this game, which in itself is basically highlighting inflation. I think it's particular to New York City, but obviously highlighting inflation. When you look at what Bloomberg Economics is talking about, they're saying that core inflation, which is now relative to Fed fund rate, actually they expect a subdued reading because people are paying up a lot more for things like gasoline, which is going to be part of this hot CPI surge, and potentially taking away from other costs.
I'm looking for something to throw around the table. That's fine. Right, just looking around. I can't find anything.
I think about ways to set up so that you can tell anything that's wrong.
Let's turn to crude. WTI looks like it's pulling back down by 10%. Such an unusual week for the energy market. It's been an unusual year. Brent crude on Monday topped at 98. It's less than 91. Got 88 on WTI. Yet we've got every single reason in the last week to expect crude prices to rise.
And we had one last night. We have the U.S. carrying out 3 days of strikes against 20 iron targets. This is retaliation of Iran downing a U.S. helicopter. I was with the president right after the meeting with the quarterback Washington, D.C. We asked him about this, and he said there's going to be a report that comes out Tuesday. Well, it wasn't a report. It was a response to Iran, and still oil is lower, and a lot more barrels are coming out than people had expected. Whether it's ADNOC, whether it's now that Kuwait was able to get some barrels to Asia. It's just hard to really understand all this is going on the trade. He said, we're robbing Peter to play Paul. Essentially, you are flooding the market with all of this oil, with it, et cetera. And then keeping demand high so you don't get the corrective mechanism that you need to really right-size the situation, which is why he thinks we have a couple weeks left before we hit tank bottoms and all hell breaks loose. And that's essentially the reason why he is incredibly bullish on commodities.
88 as it stands won't crush demand, not stateside, that's for sure. Given the performance of this economy so far, Brent crude at 91. Coming up this hour, Steve Chevron of Federated as tech stocks retreat. Stephen Kirk of the Council on Foreign Relations as the US and Iran trade fresh strikes. And Veronica Clark of Citi suggesting rate cuts are more likely than hikes. We'll begin this hour with stocks extended losses following a very volatile session. See Chevrolet, Federated calling it the storm before the calm. Ratings declare we would see any volatility as a buying opportunity. Steve joins us now from Austin. Good morning. Good morning. What do you think is behind the latest agility, the latest wild swings for tech stocks?
Let me just say, I'm not coming from either Rio or courtside of the Knicks game. I'm fresh off the New Jersey Turnpike, where traffic has been insane coming into the city, which is, I think, a sign of excellent. But look, I think there are a lot of non-fundamental factors that are going to interfere with markets and cause volatility every second. People need to make room in their portfolios for all the equity capital that's being raised in the pension funds, kind of investing to the targeted allocations, which run so far over the last year, the team has struggled so much that they're rebalancing inflation. I think today's inflation report is going to mark the worst of the worst. This is going to be the biggest jump month over month. I think we kind of stabilized from here.
Do you think this is the peak?
Not necessarily, you could get a report that's hotter, but the jump, I think we're going to go from 3.8 to 4.2 likely again. I think that's the biggest jump. So after this report, I think things will get bad at a less bad rate, which is usually what markets look to have an inflection point. You've got uncertainty around the midterms that are starting to come in. And then you have an inflation that's going to get challenged. So I think you can see volatility over the course of the summer. Our anchoring point, though, is that we still sit in what is at worst the middle of the biggest infrastructure build-out since the railroads, and margins that are growing at the fastest pace in my lifetime, and it's not as short as it was. You can see it really is. So we want to own that, and if we see volatility on some of these non-fundamental factors, we're going to buy it.
Own it or price. And this is the key issue because everybody has their hands out. Everybody wants to raise money, and the sums of money are getting bigger and bigger to pay for higher and higher cost items because inflation is going up as quickly as people can raise money to pay.
Prices are up. I don't think inflation. And I don't think that's a key. I don't think what we have is self-reinforcing upward cycle prices. The reason I don't think we have that is we don't see it in wage gains, which are still pretty modest at 3.5%. And what you're seeing is pockets of weakness in parts of the consumer basket that's offsetting the strength that you see in energy. What we kind of have is a string of poor news. And if energy's not falling, prices are going to be higher. But what we don't have that we had in 22 and 23 was just more and more money getting pumped into the system, whether it was through government stimulus or rates that are zero. And so I think what you're going to see is on a year-over-year basis, the biggest jump, this kind of 4% number. And then I think we'll see a string of 4% numbers. But then all of a sudden, when you get to the back half of the year, you've lapsed the tariffs. Even if energy prices stay exactly where they are, once you get to next March, energy inflation is zero at that point. But I think what we're likely to see is energy prices get used some, not necessarily go back to where they were pre-Trump, but use some. So I think we have higher prices. I think it's hurting some people, but I don't think that this is that self-reinforcing inflation cycle.
I would take issue with one thing, and this is something that I would expect that.
Lisa, that's kind of what we do
By
here.
the way, you're off to a fantastic vacation next week, so don't exactly cry me a river about our
Fair enough,
experiences.
fair
So, let's not go there. But I will say, one thing that, as I was talking to different CEOs, they're talking about how much money they have. Like their margins have been increasing, not decreasing. And you said that fiscal isn't necessarily coming in the same way that it did during the pandemic. Maybe so, but you're getting tax breaks that are giving them a lot of cash. At what point will companies have to raise wages in a commensurate way because they have so much money? They need to build their business. They are all investing in CapEx. I mean, why isn't that a likely outcome?
So let's talk about the margins first. And this is really important because in a high inflation environment, usually stocks don't do as well as they do in a low inflation environment, unless earnings are growing above trend. And they do particularly well when margins are growing. So what the history shows is that stocks can do as well in a high inflation environment as they do in a low inflation environment if margins are growing. And that's why you see stock markets resilient. As it relates to wages, wages are growing. They're growing at about 3.5%, and that's about where you want it, right? When it gets over 4, that generally becomes a self-sustaining kind of profit. That's 2022. 3.5% with inflation kind of around 3, let's say that's pretty average, that's real wage growth. But again, that's very different than what we were seeing with inflation of 22, 23, when we had a record period of negative real wage growth in consumers. So the consumer here, I think this is the biggest concern in all. We all know how difficult the consumers get, how patient it's been. But look at the bottom part of the K. All of a sudden, instead of adding 10,000 jobs a month, we're adding 180,000 jobs a month. And the biggest decline in the unemployment rate so far this year is folks, some college degree, think that bottom line case set people a little bit better than we do.
Steve, what do you think the Fed will do?
I think you're going to see the Fed likely on hold. What I expect to hear from Warren is how he's going to do things. He's not going to come out and say, hey, we're not hiking or we're hiking. I think he's going to maybe reiterate that we're going to trim mean measures of inflation. I think he's going to lay out a framework or a series of breadcrumbs that will communicate to the market that this Fed's not going to happen. I really think that because here's why. What is it going to do? The parts of the economy that are rate sensitive have already been in a recession. That's been what we've talked about around this table. So are we going to punish the low-end consumer more? Are we going to punish small businesses more? Because you can raise rates all you want. It's not lowering the chip price. It's not lowering the price of the gas turbine because the buyers don't need debt and they're price insensitive. So what you don't want to do is hike rates and destroy those interest rate sensitive parts of the market so that if AI catch-up slows down, you find yourself in a negative cycle. So I think this Fed will understand that. I hope that they'll understand it. I think it'd be a real policy error to get too aggressive.
So you're looking for something dovish relative to more hawkish expectations.
I'm expecting them to, drop some breadcrumbs. And the breadcrumbs would be things like, I'm going to focus on trim mean inflation.
I or we?
What's that?
I'm going to or we're going to?
That's the question. Because he does have the hardest management role, I think, of any Fed chair in a while, particularly his predecessors sitting there, apparently keeping a low profile from the different speeches that aren't so low profile. So we're going to see. We've always assumed that even though it's a committee, the Fed chair sets the direction. I would expect that Warren, being well prepared and very interested in this job for a long time, will be able to navigate that. We will see if it really is a committee. Strap in.
He's had 10 years to think about it, that's for sure.
He's very well prepared for this.
Without a doubt. Steve, you weather New Jersey sun well. It's going to see you much. You, sir. Steve Chevron, the Federation. Who needs a vacation? Who needs a
Okay, this is John's take. After I went to Rio, Emery went to the next game. John's like, who needs to go on vacation?
He looks so tan and rested already. Right?
Yeah, he spent a lot of time on the soccer field.
It's that Italian blood. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Bonnie Twit has more. Hey, Bonnie.
Hey, John. Good morning. U.S. forces carrying out fresh strikes against Iran, targeting air defense and surveillance sites near the Strait of Hormuz yesterday afternoon. The attacks coming after President Trump blamed Tehran for shooting down an American military helicopter on Monday. Bank of Japan Governor Kazuo Ueda has been hospitalized and is set to miss next week's monetary policy meeting. The BOJ writing in a statement, quote, his hospital stay is expected to last approximately 2 weeks. The deputy governor will serve as acting chair for the meeting. TSMC reporting a 30% rise in its monthly sales, the increase reflecting continued strength in demand, spurred by a global rush to build AI infrastructure. Asia's largest company has become an essential global AI player by making cutting-edge semiconductors for companies including NVIDIA and AMD. And that's your Bloomberg. John.
Thank you. Thank you. More from Bonnie Long to this hour. Up next on the program, a ceasefire on the brink.
I would say the ceasefire is on massive life support in that part of the world. Ceasefires mean shooting in a more moderate manner. We're going to win one way or the other. It's going to be militarily or effective.
Up next, we'll catch up with Stephen Kirk at the Council on Foreign Relations, live from New York City this morning. Good morning.
Horizon, Middle East and Africa, bringing stories, newsmakers, and insights from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
Drop to the opening bell.
It's deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money's flowing, which markets are
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with 읽어내는, only on Bloomberg.
Inflation data later this morning, CPI, 8:30 Eastern Time, ahead of PPI. Later on this week, the guesses, the estimates. In our survey look like this. The median for year-over-year CPI could have a 4 handle for the first time in 3 years. The estimate, 4.2%, that's up from 3.8%. Expecting the core to hold steady just below 3%. That means the Fed meeting a week today, the first meeting, the Fed was going to Fed share. Into that really volatile price action for equity markets stateside. Equity futures this morning declining by 0.8%. The losses continued on the Nasdaq, down by 1.2% after bouncing on Monday, taking it all back on Tuesday, and then adding to losses this morning. That's the stock picture. Here's the bond market. 2s, 10s, 30s. Look like this. 2s at 413. Yields creeping high again. A single basis point. 10s around 453. Off the back of some dealers in the commodity market. WTI Brent shaping up as follows. Even with the tension in the Middle East. Look at this. 88 handle on WTI. 91 on Brent. Unchanged on the session. When I saw the headline drop yesterday, I was like, oh, here we go. Crude might wake up.
Yeah.
Crude didn't wake up at all.
Woke up for a hot second, sort of up to 4%, and then it went right back down. And ultimately, people are looking for this and saying that the fact that the ceasefire is being preserved in any capacity whatsoever with them while they're missing each other and blowing things up seems a little bit ridiculous. And that gives you a sense of what the desire is, which is to stop the kinetic conflict and stop the kinetic conflict.
Crude rolled over and went back to sleep. Seems to be the last 24 hours. And the surveillance this morning, the ceasefire on the brink.
I would say the ceasefire is on massive life support. If there's no ceasefire, you're not going to have to know. You're going to have to look at one big blow coming out of Iran. In that part of the world, ceasefires will be shooting in a more moderate manner. Because the region's global. And we hit them pretty hard. We're going to win one way here. It's going to be militarily or
Thanks to latest this morning, the US of Iran exchanging fresh strikes after 10 round down the US Apache helicopter. Further strength, the fragile ceasefire. Henry joins us for the latest. Good morning, Tyler.
Hey, John, good morning. Well, this underscores just how high the tensions are running as this week marks the most gold in fighting since the ceasefire was announced. CENTCOM says that the U.S. response yesterday was protracted and done in self-defense, with the U.S. striking Iranian military targets, including radar sites, command and control stations, and air defense systems for Iran near the Strait of Hormuz. It comes after yesterday we heard from Iran's foreign minister. The post on X didn't deny that Iranian forces were involved in the downing of this American military helicopter, but seemed to suggest that perhaps the incident was unintentional. In the wake of the U.S.'s strikes, we heard from Iranian state media overnight confirming that the IRGC tried to target at least 4 American military targets, including the U.S.'s main naval base in Bahrain. Now, President Trump was asked over the weekend and expressed on early in this interview with NBC News on what his red lines would be in order to end the ceasefire. He said if Americans were killed or if he feels that a deal could not be reached, because at this point, despite all the escalation, the White House still says that diplomacy is a viable option, and a person familiar with the matter confirms to Bloomberg News that the negotiations are ongoing this week with Pakistan as the main mediator. In fact, John, we got some new reporting from the New York Times yesterday that put a little bit more of a finer point on where these talks may be headed, reporting that the two sides appear to be closing in on 4 main issues related to Iran's nuclear program. That includes the potential for a lengthy moratorium on uranium enrichment, which the Times is reporting the U.S. feels could land at 15 years.
We'll see. Tyler Kendall with the latest down in Washington. Tyler, thank you. To build on that, Stephen Kirk of the Council on Foreign Relations writes the following. Markets seem to be waking up to the fact that the Strait of Hormuz is not opening Steve, welcome back to the show. The president looks committed to finding the off-ramp. The Iranians look committed to testing his patience. And I just wonder, Stephen, how long we can hold on to the ceasefire.
Yeah, the president has indicated over and over again that he's unwilling to escalate. The CENTCOM's response to the downing of the helicopter was essentially a pinch of talked about radar sites, a number of facilities along the Strait of Hormuz which have been hit before. The Iranians just move these things back underground and then bring them back up when they are going to use them again. This is not a return to combat. And the president has indicated over and over again to the Iranians that he's not interested in it. That has given them license to actually make more demands and be more aggressive in the region. They're now trying to fold Israel and Lebanon firmly into any agreement so that they have some sort of control over Israeli security.
Stephen, what do you think the sticking points are right now in terms of the discussions between Washington and
I think those sticking points remain what they have been. The question of Iran's uranium enrichment. If the New York Times is right, we're basically going back to where we were with the JCPOA, President Obama's agreement with the Iranians over a moratorium on the nuclear program back in 2015. Then, of course, there is this issue of the Strait of Hormuz. Notice how that helicopter that was shot down was controlling the strait while the Iranians were shooting drones at commercial shipping that is using a lane of the strait that the U.S. is assisting with. The Iranians have no intention of opening this strait without having some sort of control over it. And those are what the sticking points were on April 8th, and they're the sticking points today.
the goalposts continue to change. Earlier in the complex, the president said a 20-year ban would be insufficient. Now they're going to settle for 15.
He's clearly looking for that offer. He's frustrated. He said last week that he's bored with these negotiations. We could be approaching a situation where the president actually capitulates. Maybe it's not 20 years, 15 years, 22 years, whatever it is. It seems to me he's looking for something that he can sell, that he can get out. The Iranians, however, haven't been willing to play ball and have remained steadfast in their demands that they have a right to enrich uranium and that they want some control over the Strait of Hormuz.
If you look at the markets seem to be waking up to the fact that the Strait of Hormuz isn't reopening anytime soon. Is that true? Do you really think this market is waking up to that reality?
Well, you all would know better than I do, but it seems to me that over the course of the last days, the market slide people are coming around to the fact that there is a major choke in the global economy and that it's harder and harder for energy to come out. As far as the oil markets go, there is a difference between the market and the molecules, and we're starting to see shorter inventories in the oil market.
How is this complicated, the relationship of some of the Gulf nations with the United States in terms of what they're looking for and how much this potentially impedes some of their ambitions to become global business centers?
Yeah, I think there's two things that are of great concern to our Gulf partners. One is that the president grows frustrated, declares victory, and goes home and leaves them with a mess that's not of their own making and something that they didn't want. It is a major concern. I've heard from Saudis, I've heard from Emiratis, I've heard from others that this is something that the leadership and others are very concerned about. And then there is the question of whether the Gulf model of development can continue as it has. The idea is that safe, stable, secure places that you invest in data centers. Right now, all of these things are questionable, although the market, once again, people seem to continue to believe that these places are, over the long term, places that can be critical parts of the global economy.
There's a whole industry dedicated to criticizing the president. This is not actually a criticism, it's just an observation. This is very off-brand for the president when it comes to geopolitics. This whole adventure has been very off-brand. Might I suggest even the last week has been very off-brand. This is an administration that has claimed to pursue peace through strength and criticized the previous administration for not showing American military might and securing peace through those means. And yet, Steve, this is looking more and more like what we saw in Biden, particularly the last week, letting these kind of things go. Stephen, what's behind the change?
Yeah, this is a rather extraordinary thing for the president. He was in the Gulf just a year ago, and he said things that are diametrically And then now, where he is willing to let things go. It is one thing for the president to spread wealth. Iranian attacks are below the threshold of ceasefire. But when it comes to the Strait of Hormuz, on a daily basis, the Iranians are trying to prevent commercial shipping from going to the United States to assist commercial shipping in traversing that waterway. That, and the fact that we haven't responded to that, is not just
Kuwait and Bahrain that have been really under intense fire and pressure.
Crew just about changed off the back of this mess at the moment, which is unbelievable. The price action this morning, the fireworks in equity, tech stocks declining once again. We're negative at 0.8% on the S&P 500, down a whole lot more on the Nasdaq, and the Nasdaq negative 1.2%. Up next on the program, we catch up with Thomas Bravo co-founder Orlando Bravo. Before moving on to software AI disruption fears, plus your hire. How's your morning movers? Supermicro joining the race to raise cash for AI spending. Check out that move in the pre-market. The stock is down 10%.
조용히 금이 가던 밤 아무도 모르게 흘러간 시간 웃고 있었지만 내 안은 이미 무너지고 있었어 남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해 이제 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금의 나 더 이상 숨지 않아 부서진 시간 위에 서서 나를 다시 써내려가 이게 나야 흔들림 없이 끝이 아닌 순간 버텨낸 모든 날들이 나를 여기까지 데려왔어 아직 남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해 시간은 흘러가고 나는 조금씩 변해가 그날은 나를 지나 지금의 나를 만나 이제 나라 뒤돌아보는 대신 앞으로 걸어가야 한다
And change is not coming just in data centers and AI. As a world, we are building infrastructure for renewable energy,
더 이상
we're
숨지
building next-gen manufacturing, we're ramping defense, and we're
무너진
doing this thing
기억
called AI.
위에서도
We will see the largest need for capital ever. And that's what we've seen so far this year. So now to your specific question, it's about underwriting. There are a number of very strong U.S. tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating their debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
이젠 두렵지 않아 세상이 등을 돌려도 나는 나를 놓지 않아 이게 나야
Every weekday, we look at the spotlight
is shaping markets on ETF IQ, the future of money with Bloomberg Crypto, the players behind major transactions on Bloomberg deals, rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
남겨진 말들 사이로 끝내 닿지 못한 우리 이야기 붙잡고 싶던 나를 이제야 놓아주려 해
This equity month.
이제 알아 흩어진 나의 조각들이 나를 다시 만들고 있다는 걸 이게 나야 지금
Past few sessions, equities declining once again, down by 3/4 of
부서진 시간 위에 서서 나를 다시 써내려가 이게 나야
1% on the S&P 500. At the highs yesterday, with Dow back big time at 1%. Then we were down 2% below, down marginally at the close on the Nasdaq. We saw some wild swings down 4% at one point. The Nasdaq this morning down by 1.2%. And there was some really wild swings.
남아있는 흔적 지워지지 않는 너의 그림자 익숙했던 아픔도 이제 나를 멈추지 못해
down 8.6%
시간은 흘러가고
so 10 percentage points down. That's your point, Graham. I know every single morning you're looking at the same thing I'm looking at, which is South Korea and the cost fee, which is pretty wild in and of itself.
I mean, some of these losses have just been shocking, right? We saw a more than 8% move down on just one day. This incredible volatility. You start wondering how much of these leveraged funds that are getting whipsawed by sentiment and trading around the margins. It's fascinating news. Yes, you're seeing this fragility and this increased volatility, but you're seeing a broadening out with actual gains for 3/4 of the stock, and you're seeing less bond market volatility. So there's something going on, and no one can really put their finger on what it is that's creating this volatility. Well, please give around headphones a little when it comes to this massive amount of competitive addition, potentially because this could be the case for selling pressures when it comes to other areas in the market to make sure they can loosen up their capital to get in and try to
There is a record breaking mega IPO on the horizon, and in between that, some equity options for some single names as well. So let's get into that. Let's get you some single names, some morning movers. Yohara has more. Yohara.
Hi, John. Exactly. We start with that one. We are seeing Supermicro down 10% in the pre-market as it becomes the latest company to join the party to raise capital, announcing a $7 billion equity raise. Sales of its AI servers have surged, but that just means it needs more money.
세상이 등을 돌려도
But those some $39 billion in orders just follows a period of significant cash flow for the company as Supermicro has to spend heavily upfront for chips and other components, and of course we know have gotten pricier. Speaking of chips, we are seeing some signs on demand from TSMC reporting a 30% jump in sales for the month of May. That is, of course, strong, but a bit weaker than Wall Street expecting. Also, hanging over the stock is sentiment in the chip sector is weaker again today with names like Intel, AMD, NVIDIA, all lower, coming after the Philadelphia Semiconductor Index, as we mentioned, ending the day down 7% in yesterday's session. And we get the next big test on the AI trade later today when Oracle reports shares are falling into that down some 2.7%. And looking through analyst notes, the big question will be how quickly Oracle is building data centers and converting AI bookings into actual revenue at a time when we know demand is already strong. So all about execution here.
Yohara, thank you. Thank you for the update. More from Yohara later on in the program. On our radar this morning, SpaceX drawing tremendous investor demand ahead of its mega IPO. Reuters reporting the offering is approaching 4 times oversubscribed with over $250 billion in orders. Elsewhere, TSMC shares pulling back, being chipped out, reporting a sharp rise in monthly revenue. Asia's largest company seeing a 30% rise in sales as AI demand shows backstopping payments on the larger senior portions of the debt.
Things are being created in terms of some of the structures and what pieces people are picking off and how they're backstopping some of their investments. The numbers are getting bigger and bigger, the players having to deploy things. When you talk to someone like from Apollo or Blackstone, they talk about trying to get security, having a short duration piece, maybe 5 years, etc. The numbers are just mind-boggling, though. And you start to look at some of the circular finance, and you start wondering how much everybody is just hinging on each other's success for everybody to go up. You're seeing that with respect to Google and what they're doing with Anthropic. You're seeing this across the board. Everyone is just becoming completely intertwined and hinged on them being a successful
Obvious criticism here that this looks circular, that it's off-balance sheet debt with an IG rating, thank you, Gordon. Maybe not familiar with the structure of this particular deal, there are 3 tranches. The risky piece of this to compensate with extra yield and profits on the hook for everything. The more senior portions of this debt, you've got the residual value of the chips. If that's not enough, broad concepts here, hence the IG rating on the more senior level of the debt. Does it sound risky? Does it sound creative? It sounds creative, yes, but if you think back to say the car business of the last 20, 15 years or whatever, take it to the end of Ford, financing the purchases of their vehicles, so long as it's a small part of the business and of a large part of the business, and the argument I think we heard this morning is that the broad promise is only a small part of the business. More broadly, though, Graham, I think you are exactly the right point. We are seeing very creative ways to raise more and more capital, and not every company has very flexible capital structures and the ability to do an out of that, say, you know what, I'll go to Canada, I'll go to Switzerland, I'll go to the UK, and I'll borrow $40 billion, $60 billion in over 4 months. Not everybody can do that. And when you see the equity piece of this, I actually found the story that you had to talk about just moments ago. Supermarket comes out and the rates equity, stock gets Nessa talks about raising equity, stock gets has to report that. And the whole two times, the things I'm focused on is that pushback to the structure bill to what these companies have to reconsider their plans.
Essentially, they're taking down the riskiest part. If they're taking down the leverage, if you aren't necessarily accounting for the cost of all of the purchases of the chips until those chips are deployed, that is a depreciating asset over time. How do you calculate the risk that's building in some of these companies with all this creative financing? That, I think, is the increasing difficulty. And the fact that they just keep needing to raise more and more money. I mean, really, just a handful of millions to raise more than $600 billion of debt this year. It's a sense of what we're talking about here.
We're focused on these IPOs on the horizon. I get it, they're all the headlines. I understand that. The amount of money being raised on the debt being raised on the debt and equity side just over the last 5 months.
Prices go up, so their capex has to go up, and then the prices go up further, and then their capex goes further. And at what point are you paying for the inflation that you're seeing in all of your different markets?
Elsewhere, private market deal makers gathering at the annual super return conference over in Germany. Danny Berger focused on many of these issues. She joins us now from Berlin. Hey, Danny.
Hey, Tom, that's correct. And there's one issue I want to focus in on particular, and it is the state of software and private equity. We have the leading voice to talk about that. It is Orlando Bravo, the co-founder of Colorado. Orlando, it's a pleasure to see you here.
Danny, so good to see you. This is our yearly tradition.
It is our yearly. I would be gutted if we didn't meet. Same place, same time.
One of the reasons I come here to do this.
Okay, hopefully among the top. And I know this year you have a particular message. I remember earlier this year you were talking at Stone saying the SaaS apocalypse, the worst is over. Does it go further in your mind? Is the worst being over? But is this thing over, Orlando? Where are we in the world of the SaaS apocalypse?
Danny, SaaSpocalypse, for whatever term, and that's a terrible term, by the way. I really don't like that term. It is finished. No more. And it's pretty simple. You know, people are realizing that these are unbelievable companies. When you look at the numbers coming out, even after the first quarter, and secondly, and more importantly, people are realizing that SaaS companies just don't stay still. They're not static. They evolve with infrastructure. They evolve with opportunity. And SaaS and agentic are going to merge very, very, very quickly. And these companies are the future of agents in the enterprise. And the market is realizing that as well.
So the 3,000 is over, essentially. Is that what you're saying in private markets? Is this stuff starting to be realized? Your portfolio, maybe some of your peers, at the valuations that you think they should have? Or is there still some frozen assets, some stickiness that has yet to come under?
they're going to buy a technology company or a software company, a solution provider to the enterprise. Now you really want to see that they're making a lot of progress around their AI offerings. Enough time has passed that you should see that in the business, because that's where the whole world is going to evolve to. So why not wait a little longer before you pull the trigger and have a little bit more clarity? That makes sense to me.
It doesn't sound like the worst is over, Orlando. It seems like there's still things that need to be tested and figured out. So what is the aspect? Is it just releasing where companies are healthy, or is there something else that the worst of the freak out is truly?
Well, the freak out really happened in the public markets, right? And you've seen since April, software stuff that rebounded really strongly. But the other thing that you notice, and this is really about public investor sentiment, is that whenever there's an announcement about one of the great airlines coming out with an amazing model like today, the whole software industry doesn't collapse or react to it. A big place where you saw the freak out as you over is where we invest 50% of our dollars in cyber. This is a huge tailwind to cyber, and that's one of the sectors that has rebounded really strongly over the past month.
What about in lending? What are conversations with your lenders like? I remember we had a conversation saying the cost of capital has gotten a little bit higher because of concerns. Has that come back down, or are there still difficult conversations to be had?
Lending is very difficult because, and I'm going to be completely upfront about this, there are many large asset managers that need to raise so much money monthly, and from retail. And it's not the most popular thing right now to pile that money into software. So it is a much tighter environment. Now, on the buy side, of course, that hurts you with financing, but it means you pay a lot less. And funds like ours, we do a lot better in down markets than in up markets because we're value investors. So we're really enjoying this opportunity. But once again, we're treading carefully because we want to buy companies that are part of the future, not companies that are stuck in the past.
By the way, Thoma Bravo, more than most companies, has been very successful with exits. You've also had some really successful IPOs, too. We're going to get SpaceX this week. We learned that OpenAI is going to be coming to market. Anthropic also filed for an IPO. Is this good or bad for the IPO environment and prospective exits? Because, for one thing, it starts the capital flowing, but there's also this question, is it all just being funneled? Are these just black holes of capital if you're competing for the same institutional money?
Exactly. So both points are so true. I was talking to my partner, Seth Borough, about this. He's in charge of a lot of companies along with Holden Spate that look like they're great IPO candidates in the $25 billion, $30 billion valuation range based on about $1 billion of free cash flow and their growth rates. And both of them told me last year, we won't be able to do anything this year because all the attention and all the time, let alone the dollars, are going to be focused on these massive, historic IPOs. So these smaller caps, which we are now, I guess are much more difficult to get the attention in the short term. Now, medium term, I really hope they do well because they're really important moments for capital markets and their depth. And if they do well, you'll get more confidence in the IPO market.
Well, what is a typical period for that? I know SpaceX is, we don't really have a historical corollary because it's just so large in size. But what would be your estimation of when you can enter back into the IPO market after these come in?
Hopefully 9 months, a year after. Now, that's a guess, right? So many things are up in the air. What happens with interest rates? What happens with valuations? Is there a slowdown in the infrastructure build? There's so many questions, right? It's a wild investing environment. People are saying a lot of strange things in investing right now, and the toughest thing for people that have a core competency in something is to stay the course. And of course, once again, you have to be part of the future, but you have to stick with what you know really well.
Well, remember you and I last year had this discussion that this industry had lost its way. Do you think people have had that come to Jesus moment? Have they kind of come around, or are there still lessons to be learned, do you think?
They're having it now. Look, if you see some of the software troubled credits, which there are, it's out there. It's not yet a product of AI having impacted those companies or those companies failing to transition to the new platform, which, by the way, is the biggest opportunity in the software industry. It really, really, really is. It's an issue of how those companies were run. People thought 10 years ago, after they saw all this money being made in private equity and software, that it was really easy. I buy subscription revenue, 90% gross margin, I cut some cost, and I'm good to go. They forgot to innovate, and they forgot to invest in R&D, and they forgot the domain knowledge of existing management by replacing them. And that's coming back to create some flatness in the environment, which is very difficult for those businesses.
By the way, any huge calls of how many people are going to be losing their jobs?
Look at this conference. As you know, I'm an optimist, but what we're seeing in development, the great use case for AI is we're hiring a lot more developers.
Orlando, so great to see you. Thank you so much for joining. Always a pleasure.
Thank you.
John, that's Orlando Bravo of Tomo Bravo. Interesting to hear. Again, he didn't like the term SaaSpocalypse ever, but it is dead. But also that IPO window might need to wait a little bit before you can bring companies public, just given the gravity pull of SpaceX.
Interesting. Danny, nice work this morning. Enjoyed the conversation. Thank you. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. US CPI data due out at 8:30 a.m. this morning. Economists expecting headline inflation to touch 4.2%, the highest since May of 2023. The core CPI forecast is for it to come in at 2.9%, up 0.1% from a year ago. Investors are raising rate hike bets ahead of today's CPI print and next week's FOMC meeting. A Florida trading company says it's in advanced talks to send Cuba the biggest cargo of U.S. fuel since the Eisenhower administration. Vanguard Energy is gearing up to export 250,000 barrels of diesel and gasoline. Anthropic is releasing a Mythos-like model without cyber capabilities. Fable 5 will have guardrails that prevent it from responding to certain types of queries, including those related to cybersecurity and to biology. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the programme, the Fed rate hike debate.
Inflation expectations, a tight labour market, both are signalling cause for concern. We need to see the Fed remove the easing bias and ultimately remove the insurance cut from last year. That leads us to 3 hikes starting in December.
That's the case to hike. Up next, the case to cut. Not once, but a few times. Veronica Clark of Citi joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equities declining this morning by 0.7% on the S&P 500, down by 1 percentage point on the Nasdaq, a pullback on the Russell by 0.7%. Yesterday was interesting. The bond market actually provided an offset. 2s, 10s and 30s, a 4 basis point drop across the curve. Yields this morning up by not even a single basis point. 2s back to 412. 10s at 452. Heading into CPI later this morning. As Lisa said earlier this morning, we're looking for a 4 handle on headline inflation.
People are going to be looking at the underlying components. What's driving this? Is it being driven purely by energy costs? The core CPI is going to be really key in focus. How much not only is being driven by energy, but also AI spending? And can you strip that all out and saying the consumer still isn't necessarily increasing their spending that much? Or do you have to take a look at some of the inflationary inputs that were really in play when the Fed was hiking rates?
And then a week today, Kevin Walsh at the Federal Reserve. Under surveillance this morning, the Fed rate hike debate.
I would think of the break-even market as a faulty fire alarm. You rely on it to get that signal, but you're not getting it. Inflation expectations, a tight labor market, both are signaling cause for concern. We need to see the Fed remove the easing bias and ultimately remove the insurance cut from last year. That leads us to 3 hikes starting in December.
So here's the latest this morning. Investors raising rate hike bets ahead of today's CPI print and next week's FOMC meeting. Veronica Clark of Citi suggesting cuts are more likely than hikes, writing, in our base case, the Fed cuts rates 75 basis points this year, with 25 basis point cuts in September, in October and December. Veronica joins us now for more. Veronica, good morning.
Good morning.
Explain yourself.
I know.
4% inflation later this morning. Potentially. We'll see what we get. And you've got 3 rate cuts for this year.
A lot has to change, of course, right? The most important thing I think that will change is that we will see weaker labor market data over the summer. Certainly don't see that yet in payrolls, but there's a lot of conflicting evidence. You know, we've had such strong payroll job growth, but the unemployment rate has stayed at 4.3%. We haven't seen wages pick up. Hiring plans have come back down again. Those tend to lead payrolls. Now initial jobless claims are rising. So I think we will see weaker employment data this summer. And then, yeah, you need to see some favorable details of inflation. And there's probably going to be more of this debate among Fed officials of what's the right inflation measure to look at. Core PCE is incredibly strong, but it seems like the outlier. And I think we'll see some better details even in CPI this morning.
Let's stay on the labour market. You mentioned that. That's the basis for this call. We had weakness in the labour market last summer, weakness in the labour market the summer before. Feels like we've got momentum this time going into this summer.
Yeah, payrolls have been stronger, but I'm really cautious that the payroll data has just gotten really volatile this last year. We've had some months now where they're consistently stronger, but what I think might happen is that when we get such a big shift in immigration patterns, and I've seen this in Canada also, is that you can just create this shift in employment patterns throughout the year, and maybe that's why you haven't seen such a retightening in the household survey, the unemployment rate, that's stayed stable, and that stayed stable while immigration has slowed, and that's stable ahead of the summer hiring season. When you do get students looking for work, new graduates entering the labor force, it's that summer season when you're supposed to hire a lot of people and then you're not. That's when we see the unemployment rate rise.
At the same time, we did see the employment number rise quite a bit. And a lot of investors say maybe this data is kind of messy. So look at what the companies are saying. And what the companies are saying is robust demand, robust growth, robust profits.
Yeah.
At what point does that make you a little nervous about your thesis?
Yeah, they're also saying, though, that we're not hiring people. So we got the full details of the NFIB Small Business Survey yesterday. We got the jobs details of that last week. Hiring plans in that NFIB survey do tend to be a good leading indicator for payrolls, and they broke through the lows in May. So they're the lowest that we've seen really since the pandemic. So yeah, people are still spending, but there's been this pattern for a couple years that you can have this really low hiring, weaker labor market, enough to keep the unemployment rate gradually rising, but consumption is still strong.
Can the Fed cut rates if it ends up spurring capital markets even further at a time when they are incredibly hot and people are raising tens, hundreds of billions of dollars? I mean, I can't even get my head around some of these numbers, and are able to do so because they are wide open. And increasing inflation in certain pockets.
Yeah, that is the best argument for maybe why you shouldn't be cutting, because the inflation that you see really is coming from maybe the business sector, right? It's that AI-related inflation. For PCE inflation, it's also equities that are rising, those financial services prices. PCE in May probably looks pretty strong. But if you're considering what traditional drivers of inflation, tight labor markets, housing, what is higher rates going to do to home prices that are already flat on an annual basis, and wages that have already slowed back to pre-pandemic, and it's not a source of inflation.
A lot of the Fed speak has focused on individuals saying it's time to go back to neutral. Who do you think represents your position right now at the Fed?
I think the Fed official that I would pay most attention to, that maybe sounds the most cautious, like I am on the labor market, is Mary Daly. And yeah, most Fed officials, of course, are going to be fine leaving rates as they are now. We're going to see guidance removed and everything next week. But if there were to be any signs of the labor market loosening again, I think someone like Mary Daly would be an early indicator of that.
Bank of America thinks it's messy as well right now in the labor market, but they don't think it's M-E-S-S-Y. They think it's M-E-S-S-I. They think it's the World Cup.
Right.
Do you think there's a World Cup impact here?
People started to cite that right after we got the data. We had the strength in leisure hospitality, a big interesting increase in local government employment. Maybe there's some security or something related there. We'll get the state level data in a couple weeks. It does not align perfectly with the national data, but probably gets more important as people try to pick out, as the hiring in these states that are hosting the World Cup.
Veronica, good to see you. Looking forward to that data as well. Veronica Clark there of Citi. Heard that explanation repeatedly over the weekend to really support that massive surprise we saw on payrolls.
I asked Scott Kirby about this from United Airlines, and he said it's an infinitesimal point. However, on my plane back from Brazil, the number of people wearing Brazilian jerseys, first of all, that's just sort of the uniform you have to wear in Brazil, is that sort of
that was the Bolsonaro
yellow
uniform at one point, wasn't it?
And green. I mean,
it took on a very nationalist.
It was very political. At the same time, either it was political or everybody was going to the World Cup because nobody could speak English and everybody was wearing that jersey.
This has nothing to do with the economy. My favorite thing about the Brazilian team, they blessed the plane on the tarmac. I think you sent me this video.
They baptized it.
Yes. Can we get a Jesuit or something down at MSG today before Game 4?
Big game a little bit later. You heading over?
No. I mean, maybe.
Is the president going back?
A sports reporter came out and said the president will not be attending Game 4 after rumors. So I guess there was an inquiry sent from the White House, potentially, that I'm reading into this, about him going back. I think he wants to be there for a win. He doesn't want to be there for a loss. He stayed for the whole game.
Bramo's not interested.
Putting aside President Trump.
Tell us what you really think.
To have somebody shut down all the streets, all the watch
But they're
parties,
doing it again tonight.
all the joy
So what's the
that
reason
typically
why?
comes
I'm
from
totally
all
with
of
you.
this is
I'm
you have
totally
to get
with
there
you.
4 hours in advance. Come on, this is New York.
They shut down the joy. How dare they?
I mean, it's not even about who it is.
I get you. I understand. Up next on the programme, could tell that Bramo was frustrated. Jim Bianco of Bianco Research.
Traffic.
Laura Galante of West Exec Advisors. Henry McVeigh of KKR. Tony Rodriguez of Nuveen, the second hour of Bloomberg Surveillance, just around the corner.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
There's nothing in the data that leads us to believe that inflation is slowing down on a steadier basis.
All the inflation we're really seeing is supply driven.
The Fed is succeeding on the job side of the mandate, but not succeeding on the inflation side.
There's a lot of inflation in the pipeline, which is going to affect the actual CPI numbers.
I think it's going to be very important, and I think it's going to be grim.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Jim Bianco coming in hot this morning, talking about everything but financial markets.
It's the stuff people care about this morning.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. And your price action, financial markets, look like this. Equity futures on the S&P, negative 0.6 after wild swings in the last 24 hours. On the Nasdaq, down by 1 full percentage point. In the bond market, things settling down just a bit. Heading into CPI, 2s at 412, 10s at 453. And in commodities, energy not doing much. It's got every reason to rally, and it isn't. 91 on Brent, WTI at 87. Heading into this at 8:30 Eastern time. Just around the corner, 90 minutes away, CPI in America.
Yeah, we're going to get a read that potentially is the hottest going back to 2023 in 3 years, north of 4%. And a lot of people are going to look beneath the headline. And the bulls, the hawks on the Fed camp are going to be talking about just the headline number and the reacceleration, how this is problematic, and it's coming from core as well. And the people who are dovish are going to say, look, it's all energy, it's all AI spend. And when you take a look at the other metrics, like we were just hearing from Veronica Clark, it isn't that inflationary. Trimmed bean, it's below 3%. Who's going to win out? Ultimately, this market is looking at the hawks.
There's going to be something for everyone on the Federal Reserve when it comes to this inflation print, whether you look at headline or core. But for this White House, owning a four handle on inflation is not a good look going into peak driving season and obviously the midterm elections.
So you've heard the case to cut from Veronica Clark over at Citi. Unemployment, the labour market. She thinks things will weaken through the summer. Don't see that right now. You've heard the case to hike from BNP Paribas. And BAP's point is something I've heard also from Matt Lazzetti over at Deutsche Bank. Framing matters here. Do you think we need to hike? It's one way of asking a question. Do you think we need to take back the cuts of last year is another way of asking the same question. And that's the push that I'm hearing more recently over the last week.
Did we take out too much insurance, given the fact that this market was running a lot hotter, this economy was running a lot hotter than people previously expected? And I would take that a step further and say right now, the momentum that you're seeing in capital markets, despite rates where they are, gives you a sense that maybe this isn't so restrictive for capital markets. It might be restrictive for families, for individuals. But for capital markets, that's fueling capital raises that we haven't seen before. And you're seeing everybody with their hand out. It's governments, it's tech companies, it's not tech companies that need to invest in all of these commodities that are increasing in the prices. And if the market is able to fund it, well, they can still pay for it and pay for higher prices. And guess what? That affects how much you're paying for your smartphone and how much you're paying for your life.
The crowding out is building, and you can see it. And there's just little bits of evidence building up that you're getting some pushback in the equity market. Friday, decent example. Meta in the FT considering raising equity capital in a similar way to what Alphabet did a few days previously. Just last week, Alphabet raising $85 billion in equity capital, massive number. Supermicro this morning looking to raise $7 billion in an equity deal for AI equipment. Look at that stock this morning, down by 10% in the pre-market. So you're starting to see the evidence just pile up, just little bits here and there. I don't think it's massive pushback, but just small signs of evidence that we're pushing things too far.
At a certain point, there has to be a finite amount of money unless you start printing it. If you start printing it, well, then we've got another inflation problem. But you start thinking about what Anne-Marie was mentioning, which is where is the money going to come from to buy SpaceX that's going to start trading on Friday? And it possibly is going to come from a lot of index fund buying, right? So how are these index funds potentially rearranging their portfolios to absorb about 30% of the total float, which is what the expectation is right now?
Futures this morning down by 0.75% on the S&P 500. Coming up this hour, Jim Bianco of Bianco Research as the market sell-off is deepening. Laura Galante of West Exec Advisors with President Trump eyeing a piece of the AI pie. And Tony Rodriguez of Nuveen on how big tech is contributing to inflation. We begin this hour with stocks adding to losses. Jim Bianco of Bianco Research writing the market is operating under the assumption that the AI industry is not a bubble. AI is currently in a hype cycle. Jim joins us now for more. Jim, good morning.
Good morning.
We'll save the sports. We'll put that at the end, all right? Let's start with the financial markets. The hype. How much hype is there right now into this IPO?
Oh, I think it's off the charts right now as far as the hype goes. That AI is the biggest technology that we've seen probably in our lifetime. Everybody's investing in it. They've sold it, I'm talking about Dario Monti and Sam Altman, that if you don't invest in our company at $1 trillion valuation, everything else, everybody's going to lose their job and everything else is going to be worth zero. So they've really hyped it a lot. And so two things can be true at the same time. The technology can be very real and it can be very transformative. And we've also kind of overhyped these companies.
It's like employment protection, isn't it? We've said that a few times. You're all going to lose your jobs. You might as well buy the stock.
Yeah, you might as well buy risk on with absolutely everything and give your money away. That's how my father feels.
Do you think we're getting some pushback in capital markets now? Is it starting to build? Just small signs here, there and there.
Yes, I think so. And also I think that there's been a narrative out there that makes a little bit of sense that the sell-off we've seen this week is preparation for SpaceX on Friday. You know, where's the money going to come from to buy the IPO? Well, we're finding it out with the sell-off in the last couple of days. But yeah, I think we are starting to see a little bit of a pushback, but, you know, that's to be expected. Remember, we had an 8-week, 9 consecutive day rally going into the top. This is the kind of correction you get after that run of that magnitude.
Well, we're going to pull back again this morning. Bring up the chart on the S&P 500. Session lows down 1%. Some comments from the president. Iran will have to pay the price. Iran is all talk and no action. Iran has taken too long to negotiate a deal.
They've taken too long to negotiate a deal, says the president, and that would have been great for them, he thinks. Quote, now they will have to pay the price. So this is definitely rhetoric in terms of escalation, not de-escalation. Just 2 days ago, I was with the president. He said we were 2 or 3 days away. Potentially, it could be very quick to get to an endpoint. He clearly is not happy with what's going on the negotiating table. He clearly is not happy with the fact that they downed a U.S. helicopter. We saw retaliation for that. It sounds like at the moment, if you take his words for real, that potentially we could see more retaliation.
Bring up crude, Brent, WTI. Push that story, those headlines through the energy market. It's worth not even a 2% rally on Brent crude this morning, just short of 93.
I was just thinking as Anne-Marie was talking, this market's not biting. I mean, essentially, people don't believe that there's going to be a real reacceleration, and you could see that in the muted price action.
Jim Bianco, why are we ignoring these headlines this morning? What do you make of this?
I think there's headline fatigue. I mean, a little bit of that because we've been going back and forth with it. I also think that there's a trouble trying to understand this current state of the crude oil market. How much are we running down inventories? How much is actually sneaking out of the Strait of Hormuz? Kuwait is now starting to ask that they're going to start shipping oil. How are they going to pull that off? I thought the Strait was closed. Maybe it's not. So there's a lot of other things going on in this market than just whether or not the president says we're going to go to war or not.
There is a feeling that even if prices stay here for oil, that companies can absorb it, that essentially it's not a deal killer and that it's not going to really cause this disinflationary demand destruction that people had expected. I mean, how do you fold that into your feeling about AI and the narrative there that's driving everybody to look past all of these real geopolitical risks and the potential inflationary inputs?
Well, you're right. If the price of oil stays where it is right now, it's not a big deal. It can be handled. But the question is, will it stay at this level? Because the push-pull is, as long as the price of oil stays at $90, there's no urgency to do anything about the Strait of Hormuz. And then it just continues and continues, and inventories run down. And do we eventually hit that low where we've kind of run out of inventories, and then we see a spike in oil later on? You know, it would almost be better off if the price of oil was going up now, because then there'd be more of an urgency to put a resolution into this situation instead of just dragging it out as we've seen.
We have seen, though, these choke points emerge, right, where suddenly the physical assets become very desirable and people are willing to pay almost any price for them. And we see that in the chip sector. We see that with some of the precious metals. And then you see these companies raising more debt to pay for the higher prices as everybody tries to get in. Does that worry you that sort of there is this leveraged cycle going on in a way?
You know, the leverage cycle is actually working to some extent, too. You know, if you remember that image that we talked about last year where everybody owns everybody else, and at the center of it was Anthropic, which has now gone from $380 billion in the first quarter to $956 billion now. And all that is now showing up in people like Amazon and Microsoft's income statements as other income. And so it's actually helping the stock market go up for a moment. But yeah, you're right. The whole premise on AI is that it's going to replace SaaS. This is really what it's going to do. That, as I like to say, there's a keyboard in front of us. In 2 years, we won't need these because we'll just have a context window. We'll just ask our computer what we want. It will produce the result we need. And so the whole interface that we'll have with computers will very well change. If that happens, then all this spending that we're seeing on AI is not overdone. But if in a couple of years, we're still going to need all the software that we personally have, plus everything else, oh, and we also pay for AI, then it is overdone. So will it meet that promise that it's going to fundamentally change the way we interact with data through software in a computer? If it does, it's not overdone.
That sounds more expensive than hiring someone to type.
It might be now, but the hope is that, you know, the cost will come down in the future. And that's really where we are. You know, if you want an analogy of what we're talking about here is the iPhone. Why do we pay $1,100 for an iPhone? It's not to make phone calls. It's that I don't need to buy a camera. I don't need to buy a video recorder. I don't need to buy a tape recorder or a photo album or anything else, or a calculator or a flashlight. It's all in one device. So I'm happy to pay that kind of price. Well, if I don't have to pay for all this software and everything else, I'm happy to pay higher prices for AI. But it has to fulfill that promise. If it does, then it's not overdone.
When it comes to what is going on, back to the president's truth about Strait of Hormuz, he also said recently to the New York Post, potentially, that we could be here until September. Would that have any impact?
Well, if it runs down inventories, if, you know, the idea here is why we're at $90 is because we're offsetting it through less demand from China, who's running down their enormous inventories, and everybody else. So as long as inventories keep having room to be drawn down, we could make it to September. If we get to that, you know, operational limit that everybody talks about, then we will run into problems. It's hard to say where that level is, but the argument is, and I believe it, it's months, it's not years or anything like that.
Hey, Jim, it's good to see you in person. You want to squeeze in the rant about basketball, about New York sports? Do you want to get that in?
Yeah, well, you know...
Some friends ahead of client meetings a little bit later today. Go for it.
Right. I saw this with the Cubs 10 years ago. People were so invested in this team winning. They stood the whole game. You put so much pressure on the team, they lost all the home games. And they had to wind up winning the series on the road. And the Knicks might have to do the same thing.
Jim, it's good to see you.
Good to see you
in person too, buddy.
Thank you.
Thanks for dropping by. Jim Bianco there of Bianco Research. If you are just joining us, welcome to the programme. So these headlines just dropped in just moments ago. This statement from the President of the United States. He has taken a lot in the last week, accepted it and committed to de-escalation and diplomacy. Is that about to change? Check this out. Iran's military is a complete and total mess. Much of it, like their Navy and Air Force, doesn't even exist anymore. They've been completely defeated. Iran is all talk and no action. The bully of the Middle East is dead. They've taken too long to negotiate a deal. that would have been great for them. Now they will have to pay the price.
It does look like his patience is wearing thin this morning, although we have to note we have been here before. Is this negotiating tactic from the president to put out truth like this, talking tough, to try to get them to have an agreement? Because he has been hanging on to this ceasefire, and he keeps signaling that he wants a peace agreement. But when I was with him on Friday and he was speaking to farmers, he said, and farmers who are dealing with higher fertilizer prices, higher diesel prices, he said it's either going to end with a piece of paper or another way. It'll be a harder way, maybe a quicker, but he was talking about more escalation.
Brent crude this morning up just 1% off the back of these headlines. Equities were already lower, down just a little bit more. We're negative by 0.9%, call it down 1% on the S&P 500. With an update on stories worldwide this morning with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Progressive Democrat Graham Plattner winning Maine's Senate primary. Plattner's campaign was plagued by a series of scandals and accusations of past misbehaviour. He'll face Republican Susan Collins in November. She ran uncontested in her bid for a sixth Senate term. California's SoFi Stadium averting a workers' strike just days before it's set to host the U.S. team's first World Cup match. Workers are scheduled to vote on ratification of the agreement, which will expire in April 2028 ahead of the Summer Olympics in Los Angeles. President Trump saying Iran is all talk and no action when it comes to working on a peace plan. The president saying Iran has taken too long to make a deal and will have to pay the price. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next, we'll get you an update on just that down in Washington, D.C. We'll catch up with Tyler Kendall in just a moment. Equity futures just off session lows. We're down almost 1% on the S&P from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Live from New York City this morning. Good morning. Check out the price action. Tech declines across the board. The Nasdaq down by 1.3%. The S&P down by 0.9%. The losses building up just a moment ago. More signs of increased tension between Iran and the United States contributing to that. Just on the margins, check out the bond market. 2s, 10s, 30s. Yield shaping up as follows. 2-year yields up by a single basis point. And crude barely blinking off the back of some important developments taking place right now. A developing story with crude. Brent at 92 and up just 1%. WTI still holding on to an 89 handle. Under surveillance this morning, a renewed threat to Iran.
I would say the ceasefire is on massive life support. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. In that part of the world, ceasefire is when you're shooting in a more moderate manner. There's a reason for everything. and we hit them pretty hard. We're going to win one way or the other. It's going to be militarily or on paper.
So here's the latest this morning. President Donald Trump issuing a new threat to Iran. The president posting on social media moments ago, Iran has taken too long to negotiate a deal that would have been great for them. Now they'll have to pay the price. Bloomberg's Tyler Kendall joins us now for more. Hey, Tyler.
Hey, John, good morning. Well, it's clear that President Trump's patience is now wearing thin as he issues this new threat about Iran taking too long to come to the negotiating table. It's raising questions about what could be the U.S.'s next steps here after President Trump over the weekend in an interview outlined that his potential red lines for ending the ceasefire would be if Americans were killed or if he feels that a deal could not be reached or reached fast enough. Keep in mind, after we saw the worst flare-up in fighting earlier this week between Israel and Iran, our analysts at Bloomberg Economics said that this could represent two things. One, Iran may feel more emboldened to flex its muscles amid the ongoing negotiations being dragged out. Or two, this could be the start of a wider escalation spiral. We'll have to see where this goes from here, because we did see the U.S. respond last night to an American military helicopter being shot down. While Iran hasn't denied that its forces were involved in that attack, it has indicated that perhaps it wasn't intentional in that helicopter going down, but it certainly flared with the tensions overnight, with both sides exchanging fresh fire. John, at this point, the White House still maintains that diplomacy is a viable option. Whether or not President Trump's comments change that remains to be seen. A person familiar with the matter did tell Bloomberg News overnight that the two sides do continue negotiations. They call the negotiations, quote, intense, and that they are being mediated continuously by Pakistan.
Tyler Kendall down in Washington, D.C. Tyler, thank you. You read those headlines, you put together the stories of the last week. We said it early this morning, every single reason building up for a high crude price, and you don't see it on the screen this morning. We're up by just 1%.
Well, I think Jim Bianco really spoke to something that people in the oil industry are talking about, the fact that Kuwaiti barrels for the first time are starting to get out. They're going to China. ADNOC is getting stuff out. You had an Emirati delegation, Iranian delegation meeting when it comes to economic cooperation. Phone calls between Tehran and Riyadh continue. So maybe on the margins, more oil is coming out of the region than we can really understand. And that is what's keeping a little bit of a lid on prices. And on top of that, you got the verbal intervention of the president almost consistently, besides this morning, that he wants to see a peace settlement.
This wasn't meant to be the focus down in Washington, D.C. today. The focus was meant to be a meeting. Still don't know if that meeting's taking place between the president and a bunch of founders, leaders of the OpenAI Anthropic world.
You always call it the phantom call in Trump's first administration.
Is this the phantom meeting?
This feels like a phantom meeting because the president told us on Air Force One, and he was like, did you guys know about that? And we were like, no, please tell us more. Who's going to be attending? He says there's going to be a meeting this week between, he said, all of the big ones, so Anthropic, OpenAI, SpaceX, when it comes to how there could be some sort of financing, public-private partnership. Some are even saying go as far as what they would call nationalization of these companies, the government taking equity stakes, yet there is no meeting. Potentially, though, there's one on the horizon the president is manifesting.
I noticed reporting that maybe the companies weren't even aware of this meeting.
Yes.
Ahead of this meeting. Laura Galante of West Exec Advisors and member of the OpenAI Frontier Risk Council writing the following. The Trump administration has already supported government involvement in strategically important sectors. AI seems to be the next category. Laura joins us now for more. Laura, welcome to the programme. What is the argument to take stakes in these companies?
Jonathan, the argument is around the national competitiveness of what AI brings to the U.S. So there's two pieces that I think Trump's reacting to, and Bernie has a proposal on this as well, where they're looking for ways, the administration's looking for ways to take the wealth that is going to be coming and is coming from these AI companies, from the transformation that's happening. And also, there's a public risk and an exposure piece here that's coming down the line, too, ahead of these IPOs. And look at this and say, how do you keep the innovation moving forward? How do you keep this competitive advantage moving forward, especially vis-a-vis China? And this ownership question, do you take a stake in these companies, is really where, the debate's focused the last couple of weeks. But what are we trying to achieve, and are there ways to do that that still give a competitive edge to the U.S. and to this technology?
One key point will be who are the personnel staffings that are going to make some of these decisions and have the expertise. Laura, we've seen a number of individuals depart the White House recently, most recently Thomas Lind, who had really been the architect behind a lot of the AI strategy of the White House. Does that concern you?
I think that more than a single person here or there moving on in terms of strategy, the question is what tools and who is going to be thinking through creative ways to either do competitiveness policy, do industrial policy, and look for ways to keep the innovation moving, to keep these companies in a place where they can have a public discussion around risks, and then be able to channel that to the levers of state that you have when you're sitting as an incumbent administration. And I think the capacity question that you're getting at is huge here. Do you have the people? Do you have the expertise? And then do you have the channel established? What's been really interesting to me is watching OpenAI and Anthropic put out these public policy statements and put out these very clear questions around how should you regulate us? Should we have sovereign wealth funds to figure out how to distribute the dividends here? They're putting out policy hooks. They're putting out big questions saying, we don't have the answers, but we're open to the dialogue. Is the White House, is the administration poised to be able to start answering those questions? That's the big discussion here in Washington, and also really key to how we get policy that is effective here.
Laura, one advisor who's now left, but still close to the president, of course, David Sachs, says America won't win the AI race if we beat China, but end up with a CCP-style social credit system in the U.S. And the dangers that the government becomes more deeply involved in these AI developments. Isn't there a risk of this idea of nationalization? This is not free markets and what Republicans think of them.
Certainly. The concept of an ownership stake in an American company is such a rare occurrence. We have to think back to the 2008 financial crisis, other huge national emergencies, to even have the paradigm here of the U.S. government taking a stake in a company. On the other hand, you look at what the administration did with Intel, the $9 billion investment there on the chip side, a la 10% of Intel, a pretty decent stake, and you're looking at a new question of how do you have a place at the table with this technology, but then you have this call, and you hear it in David Sachs, you hear it in a lot of traditional Republicans and across the aisle, of is this socialism? Is this picking winners and losers? Is there a risk here of anti-competitiveness? And I think that's a really legitimate concern. So how do you get at the objective you want? And the question that I think people are going to keep grappling with are, whatever the lever is to extract some level of ownership or wealth from the dividends that are coming from AI, what container do you use to put that in? Is it a sovereign wealth fund? Is it competitiveness and infrastructure build out? China's been doing this state fusion industrial policy concept for decades. We're not going to beat China at its own game, but we can turbocharge the innovation system that we have here in the U.S.
Laura, appreciate your time. The debate will continue. Laura Galante there of West Exec Advisors. I draw a line between Intel and what's happening here. I think you can make the case with Intel there was a gap in private investment, that the government was looking to sacrifice free markets at the altar of national security, and we need to support a build-out here domestically for that reason. I don't think you can make the argument there's a gap in private investment right now. This is about redistribution of very narrow gains in this economy.
No one can look at this market and say that these companies can't raise money. Tell me that with a straight face, and I'll laugh all the way to the door.
This one feels different. Let's put it that way. Coming up, Henry McVeigh of KKR out with a fresh mid-year report saying the Fed's easing cycle is fading.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A few headlines from the president in the last 20 minutes or so. Here's the latest from the president of the United States on the situation with Iran. They've taken too long to negotiate a deal that would have been great for them. Now they have to pay the price. Just moments ago, telling Fox News he's close to ordering new strikes on the country.
So we've seen a defensive posture of this administration. We've seen some assertiveness from the Iranians, like downing an American helicopter, and they responded. Now it does seem like the president, his patience is wearing thin, and according to Fox, he's saying he's close to ordering new strikes on Iran. So that would mean that the president is not choosing the diplomatic option that he has been hanging on to for so long. Just Monday evening, he told us that potentially we could have an agreement in 2 to 3 days. Well, this does not sound like we're getting close to any sort of agreement.
It's not much of a bounce in crude, though. Check it out. Brent and WTI up by not even 2% off the back of this. WTI still trading in the 80s, just about. Brent crude short of 93.
I mean, this is the idea that the market keeps getting at. The second derivative gone amok, where essentially nobody is going to allow prices to get that high. So there will be a resolution, so the prices don't ever get that high, so there's no resolution. And that's essentially the doom loop that we're in right now.
Going into CPI later this morning, 60 minutes away, with yields just a little bit elevated. 2s out to 30s, up a basis point or two, and equities declining on the S&P 500 this morning. Session lows down 1% on the S&P. Tech is a factor here. Wild swings in chips in the last 24 hours. Wild swings in chips over the last 3 sessions. Make it 4. The Nasdaq 100 down by 1.5% this morning. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Supermicro is the latest company to join the party in raising capital, announcing a $7 billion equity raise, but shares are falling some 12% now since it is a diluting event. Sales of its AI servers have surged, so the company says it needs more cash to fulfill some $39 billion in orders. And the problem for AI server companies like this one is that they have to spend heavily upfront on chips and other components, which we know have gotten pricier. Speaking of chips, as you just mentioned, we are seeing a second day of weakness in the chip sector, with names like Micron, Intel, AMD, and NVIDIA all lower after we saw a wild session yesterday for the semiconductor stocks, with the Philadelphia Semiconductor Index falling some 10% at its lows before recovering, but still ending the day in the red as investors lock in profits in the market's hottest trade, but also maybe make some room for SpaceX. And we end on the restaurant chain Cracker Barrel. Shares are surging nearly 10% in the pre-market after it raised its full-year outlook. Remember, it got major backlash after its rebrand, but now it's trying to make up for it by leaning more into its Americana brand, and that seems to be working for the company. John?
Yahira, thank you. Thanks for the update. Appreciate it. More from Yahira in the next hour. On our radar this morning, Anthropic set to release a new version of Mythos called Fable 5, designed with strict guardrails to block cybersecurity tasks. The company also announcing Mythos 5 without those safeguards that will be available to select groups. Elsewhere, New York City Comptroller Mark Levine blasting Elon Musk's, quote, unprecedented control over SpaceX. Levine warning Musk's 80% voting power disregards investor rights adding it would be complicated to exclude SpaceX from public pension funds. And finally, Yahara's been on top of this story all morning. Shares of Supermicro falling in pre-market trading, the company aiming to raise $7 billion through a package of equity offerings in an effort to purchase the equipment needed to fulfill AI server orders.
Is there room in the market right now for other companies other than SpaceX or potentially Anthropic and OpenAI to raise money? And potentially, are they going to be charged that much more of a premium? And that's the takeaway here. Also, this is money that's going to go toward building the server parts to pay for existing orders. This isn't speculative, and yet it just highlights how robust the demand is, how unable people are to keep up, and the increase in prices that they have to pay to obtain some of those materials that they then have to finance in the debt markets. I mean, again, the capital raising that's going on right now is a bit mind-blowing.
Never mind the IPOs. They're not waiting for the IPOs.
Okay.
Alphabet, upsized capital raise of $85 billion. We've mentioned that report in the FT on Friday around Meta doing the same thing, this again. And the equity market started to push back. Now, how much tolerance these C-suites have for that equity pain is something we'll have to debate in the weeks and months to come.
And just to build on what you're talking about, it's an important point. They've tapped the debt market. They're worried about tapping the debt market too much. So now they're going to the equity market and saying, you too need to bear part of this because we can't just go to the debt market. It speaks to the scope of financing that needs to get raised. And to Jim Bianco's point, either this is a revolution that is going to change the way we do everything in a couple of years, or this is an overpriced proposition. Most people seem to believe the former, not the latter.
Kevin Walsh is going to have a really hard task next week talking about some of this. Speaking of, KKR releasing their mid-year outlook, highlighting the top themes from the first half and looking ahead to the rest of the year, including a fresh outlook on the Fed, with Kevin Walsh's first meeting as chair a week away. The team over at KKR writing the easing cycle is fading, and the next debate may be more about how long policy stays restrictive. We have removed our 126 rate cut from our forecast. Henry McVeigh of KKR joins us now for more. Henry, good morning. Good to see you.
Good to see you.
Thanks for being here, sir. Let's get into this. How have things changed for this Federal Reserve in the last few months?
Look, I think what's become very clear is, and it's kind of the title of the piece, we're calling this the divergence conundrum. Half the world is having massive spending increases around national security and then around AI, and that is almost spending. It's an existential threat. You look at the other half of the economy around goods and housing, and it's depressed. So you have this pendulum, like which way do you go? If you're it's a little bit of a seesaw. And the central bank is getting mixed signals, right? Interest rates are a blunt instrument. You probably should be raising rates to restrict the pace of growth in the build out of the national security and the AI, but you probably should be cutting rates to help the lower income as well as the housing market. So that is really what the piece outlines. And there are really three other periods in history: the 1870s, the 1920s, and the 1990s. Usually comes with some type of industrial revolution and productivity boom. My gut is that that the new Fed chair, what they'll try to do is do no harm in June, right? Which is, this is probably not the time to make a massive pivot one way or the other. But my gut is that, I thought Larry Logan and others were right when they moved to a more neutral posture. We have 150 to 200 companies around the world. We have a great headlight system on what you're seeing, and prices paid are going up around the world. They are, right? There are two things going on. One is this demand-driven need for AI, because you need to cement your competitive position. The second is that more and more countries are realizing how to leverage economic choke points for political gains.
Can you make the argument also there's an extra wrinkle here, that the consumer's rate sensitive and all this spending we're seeing isn't? Is that an extra problem for this Fed?
I actually think that what's most interesting about this cycle from a leverage standpoint is we've always lived in a world, since I've known you guys, where the consumer levered up and the corporate levered up and the government delevered. Right now, the consumer, in anticipation of what's going on with the government debt markets, has delevered in aggregate. And the corporate, even though we're seeing a lot of issuance right now, by and large, they have much lower levels. So there are signaling mechanisms going on. The offset of that is when the governments went crazy after COVID by priming the pump, they really ramped up their leverage. And that's what's leading to this breakdown for most CIOs, is that their shock absorbers, which are traditionally risk-free rates, are not acting like risk-free rates, right? Japan's bond market selling off because you've moved from deflation to inflation. The UK is the tip of the sphere, right? Which is you've got if you raise taxes, everybody complains. If you don't raise taxes, then they want to sell the bond market off. And the U.S. is the third, and around Liberation Day and some other areas, it's just the bonds are no longer providing that stability that they did, and it's one of the things that we think is different about this cycle. We've been highlighting that for some time, but that really fits into this narrative, which is you do have this higher resting heart rate for inflation.
They're not providing the stability. Are they the source of risk right now as governments sell bonds at the fastest pace in history?
Yeah, I think we're running. I think we're running. Debt levels running at these same rates for some time will continue to be problematic, and it's one of the reasons we would argue you need to think about other things in your portfolio. We obviously sit on top of we manage $800 billion of private assets, so we have our own views around private equity and infrastructure and asset-based finance. But I think this is true from the individual investor all the way up to the institutional investor that this time is different.
There is a feeling right now that there are pockets of froth that have yet to be worked out of the system, and that there is a lot of money chasing AI. Inevitably, some of it will be lost in big swaths. Yeah. You say that at some point there will be some sort of rebalancing that ultimately will be required. Can you explain what that means?
So if you go, to me, I mentioned those periods, the 1870s, the 1920s, and 1990s. This is probably most akin to the railroad build-out in the 1870s. Railroads actually came about 60% of the market. Of the market cap, right? So it can go on for longer than what you think. And the other thing is if you look, and we see this internally, I would say most CEOs who come on your show are talking about AI productivity. The boom that we've had the past 8 to 10 quarters is not AI. It is started after COVID with automation, digitalization, machine learning. We are just at the start of the AI productivity. And most people are going to like it, they're going to get benefits, and they're going to spend more, because they're going to want to get that internal leverage of the productivity for their employees. So I think the spend signal is actually to keep going, not to slow down. Look, we know from the telecom issues in 2001, these things do get overbuilt. And so there will probably be some overbuilding, and we also don't know which large language model is going to win. So to me, this is know thy customer, make sure you have contracted revenues, and don't do the if they'll build it, will come. I think you're going to see some of that. That's not what we're trying to do as a firm. Particularly, we have a leading infrastructure franchise. We do a lot in AI and the data center build out, but we're trying to be disciplined around that.
Won't they all win if the United States government decides they're going to take a stake in them?
Yeah, I heard your earlier comments. I think this is actually an excellent point. What I see when you go around the world is that countries are having very different reactions to AI. To me, China and the U.S. are the two leads. The U.S. is going for a very high-end corporate model. I would say China is going much more consumer, open source. They're probably going to be the leads. I think there will probably be some convergence of church and state between the private and the public sector. But what's also interesting that people don't talk about, if you go to Japan, they have to have AI because there are not enough people. They're saying bring it on. If you go to India, they got to put 16 million people into the workforce every year. And IT outsourcing was one of their #1 exports. That's probably a little more tense. So I think it's a much more nuanced story than what you hear on the global headlines. And really what we've tried to do through our global footprint is figure out, it's not a one-size-fits-all, and try to figure out within these different economies, what do they need? Some need more power, some need more chips, some need more infrastructure to get the locations built. And so it is really a time to drill in. I think a little bit where you were going, somebody will overbuild, right? That's just the nature of these big industrial revolutions. But the power and the productivity that you get from it are will be very powerful, and we just need to navigate that. And I think the report does a good job of laying out where we think investors should tilt.
Can we finish on, Henry, one thing we are guaranteed of getting more of, and that's more equity supply?
Yeah.
How the supply-demand backdrop is shifting and how you and the team are thinking about that?
Yeah, I think we've been, we obviously focus on fundamentals, and we try to make companies go from good to great. Doing this for some time, I focus a lot, like you guys do, on the technicals. The technicals have been as good as they could be for the last 30 years that I see. I measure IPOs, levered loans, and high-yield issuance as a percentage of GDP. It has been at 3%. That is 2009's levels. In 2021, that was 8%. But as you guys are reporting, guess which way the chart's going? It's getting into the middle. So we're not at red alarm where we were in 2021, but we've left green. And so I think that's something, as this story unfolds, and Lisa and you were talking about this earlier, which is it's not just the debt. You can't just keep issuing debt. You've got to put some equity into the structure too, and can the market digest that? And so we'll have to watch, but it's definitely going from a very green, incredibly positive backdrop to one that's more mixed. My personal take is it's actually not going to be the IPOs. It will be in 2027 where you have the secondary supply when the unlocks come on. So the IPOs are going to make the headlines, but when you look at it in aggregate, it's probably 300 and 400 billion. That's not a teeny number, but relative to what can come on the supply, that's more problematic.
As you look across asset classes right now, which part of the market is more vulnerable to so-called crowding out with all the supply coming through, both in debt and equity?
I think look, to me, most investors are globally underweight infrastructure. They have about 3% of their portfolios in that. That probably should be double. That's going to grow. The tech boom is where you've seen the excess, and it's hard to argue. You have this difficult thing because semiconductor chips, particularly in Korea and other places, are trading like 7 times earnings. They're growing 100%. So it's going to be what's embedded in the price, and it's going to be the second derivative. Our model is showing very strong earnings growth through 26, and then starts to slow down in 27. Higher rates, tightening, central banks, and oil. Oil's actually not a coincident indicator, it's a lagging indicator. Usually comes through the system about 12 to 15 months later. So I think what you want to, I think this year we have the chance that we beat earnings nicely, and it keeps the market doing okay. I think when you look more towards the second half of 27, that's where we would see a little bit of softness in the earnings.
Henry, this was a privilege, a pleasure. Thank you,
Always
sir.
great to see you guys.
One of those conversations I'll go home and listen back to. Henry McVeigh there of KKR. Lisa was talking about the record debt that we've seen so far. Hannah Benjamin Cook and the team here at Bloomberg put some numbers on that. $504 billion of debt, sovereign, issued so far this year, more than the first half of 2020. Think about how much was issued through the first half of 2020. We've beaten that.
Yeah, well, prices are rising and the governments want to get on it too because they're all trying to solidify some of their domestic security and their critical minerals. What Henry McVeigh also wrote about in this piece, which I thought was really interesting, was that during times of industrial revolutions, there tends to be a confluence between government affairs and government issues and political issues and economic ones. And we're seeing that in a massive way, and you see it particularly in the physical goods space.
Some big shifts, that's for sure. The S&P this morning, session lows were down 1.1% on the S&P with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. President Donald Trump telling Fox he's close to ordering new strikes on Iran. The warning coming after Trump posted on Truth Social, Iran will, quote, pay the price for taking too long to negotiate a peace deal. Trump going on to post about the U.S. blockade of the Strait of Hormuz, writing, quote, nothing gets through unless we want it to. It is a steel wall. Iran is doing zero business, not paying their military or any of their bills, and quickly becoming a failed nation, unquote. TSMC reporting a 30% rise in its monthly sales. The increase reflecting continued strength in demand spurred by a global rush to build AI infrastructure. Asia's largest company has become an essential global AI player by making cutting-edge semiconductors for companies including NVIDIA and AMD. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in the next hour. Up next on the programme, big tech driving inflation higher.
Inflation remains above target. I think that the rate-insensitive purchasers, the hyperscalers, that really hits the nail on the head. That is inflation or overheating. This is increased demand outstripping supply and raising prices.
Up next, Tony Rodriguez of Nuveen.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Equities declining here. We're down 1% on the S&P 500, negative almost 1.7 on the NASDAQ. It's been a wild ride for tech in the past few days, going into a record-breaking IPO in the next few days from SpaceX. Adding to this move lower, some comments from the president a little bit earlier, losing some patience with the Iranians. Only 24 hours ago, not even, the president was talking about closing on a deal with them, and now it's maybe striking them again.
Yeah, he said that to my face. He said it could be 2 to 3 days. And I said, did you mean weeks? Because he usually likes to do 2-week increments. He said, nope, I mean days. So now he's saying that basically when it comes to Iran, they've taken too long, in his mind, to negotiate a deal. He said it would have been great for them. Now they will have to pay the price. So everyone is expecting two things. One, is the president just using rhetoric to negotiate better terms or try to get the Iranians back to the table? Because we don't really have a lot of insight on where they are in the stages of these talks, or is he serious? And we're going to see more strikes.
You wouldn't know based on this move in crude. Said this a few times. Brent this morning around 93. Under surveillance this morning, focused on CPI at 8:30 Eastern Time. Big tech driving inflation higher.
Inflation remains above target. I think that the rate-insensitive purchasers, the hyperscalers, that really hits the nail on the head. That is inflation or overheating. This is increased demand outstripping supply and raising prices. It's not something that is going to return anywhere close to 2% this year.
So here's the latest this morning. Investors bracing for fresh inflation data due out today, expecting CPI to hit multi-year highs. Some on Wall Street warning big tech's AI spending spree could continue driving up prices. Tony Rodriguez of Nuveen writing, tech-related investment is now contributing to inflation. We expect this tailwind to remain over the rest of 26 and into 27. Tony joins us now for more. Tony, good morning.
Good morning.
Does the Fed have to respond to that?
We think the Fed is responding because we think the Fed was going to be cutting, so they're responding by delaying cuts. So we don't think the Fed's going to need to respond by raising rates at the moment. Now, if things really get much worse on the energy side because of what's happening in the Middle East, that could maybe push the needle towards needing a hike. But right now, what we think has happened is cuts are off the table for the balance of the year, and you need to see maybe into the middle of next year when you get some easing in the inflationary pressures.
It's inevitable that I'd ask this question. What is much worse? What does that look like?
Well, right now, if you look at energy prices and you look at kind of the futures curve, you're looking at around $85 oil at the end of the year. That's the highest it's been all year. If you just see that get up closer to $100, that's going to cause it to continue to push into the end of 2027. And I think at that point, you'll start to see the Fed need to. Right now, we think they need to take the easing bias off. by the time you get to September, if you're looking at a futures curve that's pricing $100 oil because Middle East developments have deteriorated, then I think you're going to be looking at a hike.
Are we being too cute about this, given the fact that yields are higher and that you're seeing inflation potentially running at the highest pace going back 3 years when the Fed was in a hiking cycle? Are we being overly optimistic about the disinflationary forces and the ability for consumers to just look at a very narrow selection of goods and price increases there?
Yeah, I don't think so, because I think if you were to continue to see this kind of pace of energy price increases, for example, the demand destruction becomes that much more acute. So right now you're already seeing some demand destruction, particularly when you're talking about lower income households because just of gas prices, et cetera. That would really begin to pinch even further. And then I think you'd see declines in consumer spending, increases in consumer delinquencies and defaults. So the demand destruction element would, I think, temper any need for the Fed to have to react to energy prices if they keep rising at this pace.
Are you seeing any demand destruction or destruction of appetite by investors to keep lending to tech investors right now with rates where they are and with some of the price pressures?
Yeah, I would say no, but I think one of the big reasons that's occurring is because most of the very large hyperscalers are actually also leaning into the equity market to help support their balance sheet a bit. So I think if you didn't see that, then I think the appetite in the fixed income market would not be there, and you would see a much higher increase in rates, widening in spreads, et cetera. But the fact that they're being somewhat careful about their balance sheet strength and using the equity market to help finance some of that, I think then the demand on the fixed income side will be there.
Steve Sharon brought up a good point in the earlier hour about how if you were going to hike rates, it's not going to stop this AI trade, and it's just going to hurt the lower income individuals across the country. Do you think that's the message Kevin Warsh is going to potentially hint at next week?
Well, I think if the question is directly related to do you hike over AI spending, he may point to that because, yes, the Fed really can't do anything about that, just like the Fed can't really do anything about what's happening in the Middle East, right? So they are going to try to look through as far as they possibly can, but at some point, back to like, hey, if at year-end energy prices are $100 or staying in those, this $90 range, then you can no longer look through it as easily and as rationally.
What do you think the dots look like next Wednesday?
What's that?
What does that dot plot look like next Wednesday?
That's interesting because you have a little bit of just responding to the actual macro developments that have occurred, and you have a little bit of what I would think is maybe positioning in terms of how they want to see themselves versus what they think Warsh and signaling where they want to be. So I think you're going to see dots that increase a bit.
Anne-Marie's on the no dot.
No dot.
No dot camp.
I'm in the Jackson Pollock camp. Just throwing paint at the wall and essentially see what happens.
Kevin Warsh might not put a dot on.
You lost me for a moment.
Okay.
Now I'm with you.
Just like a spray of dots at all different places and being like, figure it out. It's useless anyway.
Tony, it's good to see you. Thanks for being
Good to see
here.
you guys.
Thank you, sir. Tony Rodriguez of Newfeed. Looking for inflation to come in with a 4 handle. We haven't seen that for 3 years. The last time the Fed saw that, the Fed funds, the upper bound, had a 5 handle. Has a 3 handle now. Things have changed a lot. Coming up next, we'll catch up with Gargi Chowdhury of BlackRock, Dan Ives of Wedbush, Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management with inflation on deck. That data point, 34 minutes away.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The markets are wagging the economy, not the other way around.
The majority of the opportunity here is really in the AI compute space.
As long as the capital markets remain open to these really massive market caps, that's the opportunity.
This is really, I think, an earnings-driven story.
It could be more choppy this summer, but we don't think that the bull market in equities is over.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action, the score looks like this. We're negative 1% on the S&P 500, down by 1.5% on the NASDAQ. In the bond market, yields shaping up as follows. 2s, 10s, and 30s. Yields higher by 2 basis points on 2s, up 2 on 10s. Your 10-year, 4.54. Heading into this, 29 minutes away. CPI in America at 8:30 Eastern Time. We're looking for a 4 handle for the first time in 3 years on a head